My news feed is overflowing with negativities. They say that the market has become so unpredictable that it is so impossible to make money. And the percentage of those who trade consistently in the green is getting smaller and smaller. Alright, let's now get down to business. Yes, that is partially true, but there is a key point here. Psychology and candlestick pattern, which allow you to read the market. They have always worked, and not just in trading. There are always people who make decisions. There are always certain patterns which guide their decisions making. Today I will show you how even in the difficult market environment you can earn money without much effort. Like the video and watch until the end to take this pattern for yourself and start applying them in your trading. Let's begin. The terminal is ready for trading. I have already found the spot where a reversal is happening and a candlestick pattern is forming. We'll analyze it now. I'm entering a short, expiration 1 minute, and I'm putting $300 into the contract. The first thing to do is find and access the pressure level from the previous downtrend. Yes friend, we trade strictly with the trend. Now I'm placing a horizontal line to mark the zones. Perfect. It is immediately turning red, exactly what we need. We place it where the small pullback were. The traders place volume there, and we can use this level to see the price reactions. Let's zoom in to where the trade is open. Overall, things are going well. The candles are red, the movement is downward, and with a higher probability, we get the profit. Pay attention to the key point, the size of the candles. It shows how big the selling volume is at the moment. When candle close and the volume is confirmed, this pattern can be used for future analysis and decisions making. You can see yourselves. Inside, these candles are engulfing the previous one. The point is that the market participants, especially the sellers, after the small upward move, turned the price back down. It worked here, moving on. Friends, great. Next example, we are again trading a pullback, but here beside a candlestick pattern, a head and a shoulder pattern is forming. Let's outline it. Shoulder, head, shoulder in the short versions. This is one of the popular structure. Traders use it often. From the last shoulder, we determine the resistance level and trade down from it. It all look simple, but not as simple as one would like. I think everyone has faced the fact that the market situations can vary greatly and that can be confusing. Here, friends, it's come down to experience. To develop their skills and take profit more often, I recommend subscribing to my Telegram channel via the link in the descriptions. There you will find all the main patterns and models that help you earn, as well as break down many different market situations. This directly increases your experience and chance of success. Let's continue. The browser liked a B, no big deal, and there is another profit confidently lands in our account. The model and pattern work, and we can continue trading in this zone. The situation is developing favorably, and again I will use the candlestick model. First, I showed you the pattern, but to be more confident in the analysis, it needs to be supported by additional factor. Our task is to find high volume candles. In this case, we see 3 candles in a row with a strong downward impulse. From the higher points of these moves, we draw a lever, and here we can immediately notice the wick above the candles. It precisely shows that price is indeed being pushed down from the barrier. I recommend that before entering a trade, you don't just look at such spoof with your eyes, but additionally mark them with markers. line shapes. It is easier and clear to work this way. These tools are available on different platforms. I hardly use them because I'm used to a clean charts and experience allows it. Right now, the candle is moving very slowly. This is related to volatility being lower than before. Simply put, there are a fewer active participants in the market now, but it is now critical. It can be worse than candles stop moving altogether and price goes almost flat. Alright, another slight freeze. Let's refresh the page. Some technical issues, but overall they don't bother us much. I think we'll take this trade. Let wait a be. Yes, balance top up. That's good. Moving on. I see a third entry opportunity here. Need to wait a little bit. Yes, friend, candlestick pattern works. The market is pure psychology. We see the same candles at the same pictures in a moment. Each participant make decision based on what they actually see with their own eyes. On this non-verbal level, most people coverage in opinion, and in the end price move precisely in the directions the market is psychologically inclined toward. To understand and predict such movement, you need to be able to find and read candlestick patterns. In this case, I see a formed red candles with an upper wick. It practically engulfs the previous one, and next we logically see the price draw. An impulsive downward movement is happening. An additional benefit is that the last candle is red and directly downward. It has almost no wicks, neither above nor below. This indicates a strong impulse that continues to push the asset lower. I've already said that candlestick patterns work and help predict reversal because the market is about psychology. And here, it is not about one specific formations, but a whole set of skills, from how you react to a situation, to the state, you short, your trading day in. This isn't a story about logging into play like your favorite game. No, trading is systematic work and discipline. Here we take the center of the candles and make it as a small lever. It suggests where to place the entry point. And yes, you need to be extremely careless to treat trading like a game. If you still have that attitude, change it immediately. Otherwise, you will simply lose money. If you are asking what to do and how to figure it out, my friend, subscribe to my Telegram channel. It is impossible to fit all the knowledge base really need into one video. A comprehensive approach is important there. When you come for an internship at a job, you don't start working right away. First, you learn. You figure out the sequence of actions. You understand what needs to be done and how. It is exactly the same thing in trading. Now, an important moment. We have consecutive and successful entries, and I'm showing what to do if you're not a drawdown. First, pull yourself together. This is crucial. Next, you need to increase the amount by exactly what you lost and add a little extra on top so that you get in profit. After that, we assess the zone from which the candlestick pattern is forming. There is a strong level above. Using it as reference, we can predict the reversal in advance. Why is that? Because some traders work with pending orders, and most often they place them exactly in such spoof. Our task after a series of losses is to wait for the price to approach these zones and only then enter. I open a contract for $1,000 and I increase it the expiration to 2 minutes to take this reversal with maximum probability. In fact, nothing complicated, but only if you are honored every actions, you can repeat this even 10 times a day until everything starts to work on a mechanical levels. To avoid blowing money for nothing, use a demo account. Yes, friend, as soon as you enter the market, you don't need to rush to use real money and learn from your mistakes at your own expense. No, take virtual funds. Most platforms allow this and it's really convenient. Okay, our trade is its same closing. The final seconds, since there is a downward movement and close at the break even. The $1,000 is returned. We neither earned nor lost. The contract closed exactly at its current price level. Alright, moving on. It is important to be persistent here. The movement still has potential for a reversal. So we see that a large red candle formed earlier. Next we take it high and low and assess how many previous candles it engulfed. This is called an engulfing pattern. When engulfing happens, a simple conclusion can be made. The market participants who are selling are really pushing hard to turn the price in the desired directions. Actually, friends, I already shown you quite a bit. This contract will be the last. There is no point in overloading you with too much information. Take everything part by part, hone it, analyze each element separately, and only then move on to the next. If something remained unclear, you can always DM me on my Telegram or leave a comment below this video. I will reply and help break down your questions. But I think I've explained everything clearly and simply enough, and you can already use this knowledge in your trading. Friend, there is profit. We can wrap up our session here and summarize this video. Today, you saw how candlestick pattern works, why the market moves exactly this way, and how to use it in the real trading. This knowledge is the foundations that can and should be applied in the practice, step by step without rushing. If you want to dive deeper into patterns, market psychology, and see more breakdowns of real situations, subscribe to my Telegram channel. The link is in the descriptions. There is even more useful content there, no fluff. Subscribe to the YouTube channel, hit the bells not to miss any other videos, and support the video with a like. That's all for now. See you in the next episode.